Welcome to Coverage Clarified, where we make insurance simple, clear, and jargon-free. If you rent an apartment or house, you may have wondered what happens if something goes wrong inside your unit. Does your landlord's insurance protect your belongings? Or do you need your own renter's insurance? In this episode, we compare the two side by side, so you can see how each one works and what questions to explore with a licensed agent. This is general education, not financial or insurance advice. Everyone's situation is different, so please talk to a licensed insurance agent or advisor before making decisions. A landlord's policy is usually purchased by the property owner and focuses on the building structure itself plus certain liability risks tied to the property. Renter's insurance, by contrast, is a policy you buy to protect your own personal items and to provide liability coverage if someone is injured inside your rented space. Both types of insurance use terms such as premium, which is the amount you pay for the policy, and coverage limit, which is the maximum amount the insurer will pay for a covered loss. Understanding these basics helps you see where each policy stops and starts. We will walk through typical coverages, how claims usually work, and what to ask when you speak with professionals. By the end, you will have a clearer picture of the differences, so you can decide what fits your needs. A landlord's policy, sometimes called a dwelling policy, is designed to protect the physical building and certain parts of the property that belong to the owner. It generally covers damage to the walls, roof, floors, and major systems like plumbing and electrical wiring if a covered event occurs. The policy may also include some liability protection for the owner if a guest is injured in a common area, such as a hallway or parking lot. Because the policy is written for the building owner, it typically does not cover the renter's personal belongings, such as furniture, clothing, electronics, or other items you bring into the unit. Many landlords require tenants to carry their own renter's insurance, but that requirement varies by property and by state. When you review a lease, look for any mention of required insurance and ask the property manager exactly what the landlord policy does and does not cover. This is a good question for a licensed agent who can review your specific lease language. Keep in mind that coverage details can differ from one policy to another, so reading the actual policy documents is important. Renter's insurance is a policy you purchase to protect your personal property and to add liability coverage while you live in the rented space. It usually covers your belongings against certain perils such as fire, theft, or water damage from a sudden leak. The policy can also pay for additional living expenses if your unit becomes unlivable after a covered loss and you need to stay elsewhere temporarily. Liability coverage under a renter's policy may help if someone is injured inside your apartment and you are found responsible. Before buying, you will name a coverage limit for your personal property and a separate limit for liability. The premium you pay depends on factors such as the value of your belongings, the location of the property, and the amount of coverage you choose. A higher deductible, which is the amount you agree to pay before the insurer pays, generally results in a lower premium. Because every renter's policy is different, it helps to read the declarations page and ask the agent which events are covered and which are excluded. This comparison is something to discuss with a licensed professional who can explain the options clearly. The main difference between the two policies is what each one protects. A landlord's policy focuses on the building structure and the owner's liability, while renter's insurance focuses on your personal items and your own liability inside the unit. For example, if a fire damages the kitchen cabinets that came with the apartment, the landlord's policy would typically respond. If the same fire damages your couch and television, your renter's policy would generally be the one to consider. Liability works in a similar way. The landlord's policy may cover an injury in a shared stairwell, but an injury that happens inside your living room would usually fall under your own liability coverage. Some policies also address loss of use, which means paying for hotel costs if you cannot live in the unit. Because these coverages sit side by side rather than overlap completely, it is useful to ask how each policy would respond to the same event. A licensed agent can walk through sample scenarios using your lease and your inventory of belongings so you understand where protection begins and ends. Deductibles and premiums work the same way in both types of policies, yet they apply to different parties. The deductible is the amount you or the property owner pays out of pocket before insurance begins to pay. A higher deductible often lowers the premium, which is a regular payment that keeps the policy active. In a landlord policy, the owner usually selects the deductible amount. In a renter's policy, you choose the deductible when you buy the policy. Because the numbers change and vary by insurer and location, it is best to ask the agent for current examples that match your situation. You may also want to ask how the deductible would apply if both policies respond to the same loss. Understanding this interaction helps avoid surprises at claim time. Some renters choose a higher deductible to keep monthly costs lower, while others prefer a lower deductible for more predictable out-of-pocket expenses. These trade-offs are personal and depend on your budget and risk tolerance, so discussing them with a licensed professional is the next step. When a loss occurs, the claims process usually starts with notifying the insurer. For a landlord policy, the property owner or manager files the claim for damage to the building. For renter's insurance, you file the claim for damage to your belongings or for liability. Documentation, such as photos, receipts, and a list of damaged items help support the claim. The insurer then investigates whether the loss is covered under the policy terms. Because two policies may be involved, coordination between the landlord's insurer and your insurer can happen. Ask in advance how the two companies would share information and whether you need to contact both. Some renters also ask whether the landlord's policy has any subrogation rights, which means the insurer may seek reimbursement from another party after paying a claim. These details vary by policy and by state, so a licensed agent can explain the typical steps and what records you should keep. Clear communication at the start of a claim often leads to a smoother process. Before making any decision, it helps to prepare a short list of questions for the landlord and for any licensed agent you consult. Ask the landlord exactly what the property policy covers and whether tenants are required to carry their own insurance. Then ask a renter's insurance agent which events are covered, what the deductible options are, and how additional living expenses would be handled if the unit becomes unusable. You may also want to know how the policy treats high-value items, such as jewelry or electronics, and whether an appraisal or receipt is needed. Another useful question is how the policy responds if a loss is caused by a neighbor or by a maintenance issue in the building. Finally, ask whether the policy can be adjusted later if your belongings change or if you move to a different unit. These conversations give you the information needed to compare options side by side. Because rules and forms vary by state and by insurer, the answers you receive will be specific to your location and your lease. A landlord's policy protects the building and the owner's interests, while renter's insurance protects your belongings and your personal liability. The two policies work next to each other rather than replacing each other, so understanding the boundaries helps you see what may still need coverage. Review your lease for any insurance requirements. Make an inventory of your belongings and speak with a licensed agent about how each policy would respond to the same event. Key questions include what is covered, what the deductible would be, how claims are filed, and whether additional living expenses are included. Remember, Coverage Clarified is general education, not financial or insurance advice. Everyone's situation is different. Prices and rules change and vary by state. So always talk to a licensed insurance agent or a qualified financial advisor, and check current details with an official source before making any decision.